Welcome back. You're watching us here on Markets Today. We've been talking about all the things that moved around in the market, and let's talk about Max Healthcare. That too was in focus today after it reported a good quarter with higher occupancies and strong hospital revenue growth. Abhay Soi, the chairman and managing director of the company, said that the second half of this year is typically better than the first half, and he added that the international patient levels, they were also back to over 110% of pre-COVID levels, and that would be a big growth driver for them going forward.
Well, typically a second half of the year is usually better than the first half of the year, marginally better than the first half of the year. So what you're going to see is, of course, as far as occupancies are concerned, you're not going to have a 78% kind of occupancy when you come off the season in the first quarter. In quarter three, but you will have higher ARPOBs compensating for it because you've got a better surgical mix, more surgical patients, which typically tend to pay you a higher ARPOB. I think this, coupled with the fact that we are also seeing extremely high clip of recovery as far as our international business is concerned, we are already back to more than 110% of pre-COVID levels.
Nykaa was down by over 2% in trade today. It reported a decent set of second quarter numbers. The stock moved yesterday. In fact, it gained about 20% of the previous trading session as well. The revenues for the company were up 7% sequentially. The EBITDA was up 33% quarter on quarter as well. We spoke with the management and they said that the fashion segment has actually seen a 43% year-on-year growth this year. And in this quarter, 66% of the fashion's GMV is actually coming in from repeat buyers. Let's hear them out.
We're quite pleased with the fashion performance for Q2. Fashion has grown 43% year on year. It does contribute about 26% of the consolidated company's turnover. I think we're furthermore feeling good about the business in the sense that it is continuing to be contribution margin positive with a clear line in sight in terms of profitability. And then lots of other core metrics are looking good, whether it's a much higher average order value, whether it's the expansion of share of our private labels. So overall, feeling that a lot of metrics are headed in the right direction from the fashion business.
Right, and the fifth headline today, the big newsmaker this evening. India is set to become the world's third largest economy and the stock market by 2031. Not too far from here, rather, according to a recent report by Morgan Stanley. Speaking exclusively to CNBC-TV18, Ridham Desai, the managing director, said that India is primed for high growth over 10 years and it can actually become the office and the factory of the world. He expects financials, consumer discretionary, IT services as well as industrials to drive the growth in this decade, which he believes will belong to India.
All the labor that we put in terms of policy and other things are now bearing, I think, fruit. There are also a few things happening globally that are helping us. So it seems like a sweet spot for India. In fact, as we highlight in the report, stunningly, India could account for 20% of the growth that the world will generate over the next 10 years. So it's a very, very big shift. India has grown quite well over the past few years, but its share in the global economy is changing in a very dramatic fashion. Now, I'm sensing that companies in India are getting more optimistic. They are starting to run into some capacity constraints. And therefore, there should be a pretty good capex cycle in the next 2-3 years. And that will be great for earnings. So that's something that we'll watch out for as well. But I think India is set to now become a meaningful part of the global supply chain. And a lot of companies will reveal this to you, that they're receiving orders. Hitherto, they didn't have access to those orders because Chinese companies used to take those orders. And they are now all set to increase capacity to service these export orders. On top of this, multinational companies are looking at India as a very attractive destination. This year, India has outperformed emerging markets by 34 percentage points. It's not happened ever before. Emerging markets around the world are really broken. And India is therefore looking so good on a relative basis. But on an absolute basis, the market has not really gone anywhere. So it's been a typical consolidation, I would say very benign consolidation. It could have been a far more volatile consolidation, but it's been a benign one. So I think we're prepping it up. I think 2023 looks like it will be a much better year for absolute returns.
With that, we wrap up on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV 18 News and updates continue.